What's going on, brothers? Welcome back to Brotherhood Finance. The largest transformation of wealth just happened. What does this mean for the markets moving forward? How can you capitalize on this event? What do I mean when I say the largest transfer of wealth is occurring right now? In today's video, we are going to be diving into all of the stats, all of the statistics, and all the information you need to know about the equities market, the stock market, the cryptocurrency market, and the real estate market. Furthermore, please make sure to smash that thumbs up button down below for the YouTube algorithm. I appreciate all the love and support. Make sure to leave a comment down below and follow us on our other social medias. Much love. Furthermore, let's dive into this right now. 4.3 million people quit their jobs in January as the Great Resignation shows no sign of slowing down. We have jobs that are, not at a huge extent, but people are starting to lose their jobs. We have the crypto market selling off. We have the stock market selling off. We are looking to be in what I believe is the beginning stages of a recession. How can you capitalize on this? Again, in an orderly fashion, I'm going to be going and breaking down the numbers and statistics and then telling you what you can do and the implements and what I'm currently doing. So again, the Great Reset needs the circular economy to render all products and services so you'll own nothing and be happy. They say if you own nothing, you'll be happy. Millennials are banking on the great wealth transfer. 4 words why you shouldn't cash that check yet. So we're going to be diving into all this information. Now, let's start with the stock market. The stock market, the S&P, the Dow, all those markets right now are down from anywhere between 20 to 30% already. Typically in the last recession we had 2008, 2009, those markets dropped about 50 to 60% per market. So the bleeding could continue. In my opinion, I think we're still at the beginning stages. But if you look at some of these markets right here, we have Facebook down 50%, Teladoc down 83%, Snap down 73%. So we're already looking at huge drops in some of these companies and some of the equities for these stocks. Not to mention, we've talked about before, the US GDP falls 1.4% as economy shrinks. Again, that is showing you, the GDP, the gross domestic product, how much goods and services people are actually buying. And on top of that, with GDP falling, we also have inflation coming in at a 40-year high at 8.3% as it continues to come back. And recession warning shock is coming, Bank of America warns. So we have all these indicators. Now, with the inflation and the hyperinflation that is occurring, the Fed is raising rates by half a percentage point, the biggest hike in 2 decades, to flight to 8.3% of inflation. And on top of that, there's supposed to be countless basis point hikes, relatively anywhere from 25 to 50 basis point hikes that they're going to try to increase, again, to control inflation. So what is going on with the real estate market? We've talked about the stock markets getting hammered. Again, we're going to talk about how you can capitalize. Mortgage rates hit highest level since 2009. What it means for prospect home buyers. So, that is really occurring right now. Mortgage rates, I still think the housing market's still a little bit overpriced. But again, as we've talked about before, as mortgage rates and as the Fed increases interest rates, those rates are going to correlate and continue to increase, which means it's going to be harder for people to buy stocks, and stocks are going to look less attractive. It's going to be hard for people to buy real estate. And this is what I like to call the everything sell-off. Again, this is because of inflation, this is because of higher interest rates, and this is because of the current uncertainty in the market. Now in 2020, we had that coronavirus crash, but what happened was the Fed injected a lot of money into the market to prop it back up. This one is different. This one is, more of an occasional and normal recession that's occurring that spans over a longer time. For about 7 months or so, we have already, pretty much been on a downward spiral. Robinhood cutting employees about 9% of their employees, of their full-time employees, so they're having to lay off people. Rocket Mortgage to trim workforce as home loan market shrinks. Now you have to take into perception, brothers, when I'm talking about this stuff, in order for us to actually have a recession like 2008 or 2009, we're going to need to see the housing market crash, which we have not seen yet. We're going to have to see people lose their jobs. Millions of people lose their jobs like what happened in 2008, 2009. We're going to have to see the equities market continue to get hit and, the price of goods and services to change as well. And inflation needs to come back down. With the Fed raising interest rates, that is kind of a bearish sign overall already. We have already had some terrible days in the equities market. The Dow tumbles 1,000 points for the worst day since 2020. NASDAQ drops 5%. Now, what does this mean for the average person's, the average Joe's portfolio? Amateur traders have working with less financial capital as they face portfolio declines of at least 20%. So that means their portfolio is already down 20%. Now, as far as recessions and what they're saying about a recession, at 4,000, the recession odds embedded in S&P 500 are close to 0. By our math, 50-50 odds of a recession equate to an S&P at 3,525, which would be a substantial decline of where we are currently at right now. And big stock bears say S&P 500 bottom, it could still be another 700 points away. So that means there could still be room downwards from this, this crash that we are currently in. Now, the previous 10 instances when stocks endured deep losses in the first 4 months of the year, 6 saw the market extended declines through December, and only 2 saw gains exceeding 10%. Now, we've talked about cryptocurrency, we've talked about housing market. My opinions. Cryptocurrency alone has been getting crushed. Now, you have to understand with cryptocurrency, that is mainly because in the cryptocurrency atmosphere, there's a lot of leverage traders, a lot of people that use leverage to buy the asset vehicle and to invest in cryptocurrency. Now, what I see with a lot of newbies and amateur traders is they don't understand that, yes, cryptocurrency is the future. Web 3.0 is going to be huge. It's going to be like the internet adoption. However, you have to take in consideration that cryptocurrency is more of a speculative asset, which means it's going to hold more volatility relative to the stock market or to the housing market, compared and contrast as that asset vehicle. So when I say that, I mean, when we have, let's say we do continue to go into a recession, again, I personally believe we're already in a recession, the very beginning stages. Now, why do I say that? I'm jumping around here. I want to get back to why I believe we're in a recession. It's because we've had a negative GDP. Now, there's 4 quarters in a year. We've had 1 negative quarter of GDP at that 1.4%. And in the next 3 months or 4 months from now, if we have another negative quarter and quarter 2 of negative GDP, that means we are officially in a recession. If you watched our prior video, how to benefit from a recession, how to make a lot of money in a recession, go check that out. We talk about that, how to benefit in a more in-depth video of how to prosper. But when we're talking about cryptocurrency, again, very leveraged. People, they may get over leveraged, which may have them to, liquidate. They might have to liquidate and pay back the funds at which they get from their loaner or from the broker that they're using to pay them back. So that's important to keep in mind. Again, I love cryptocurrency. I think it has a great future, but don't overextend. And the best thing you can really do is just dollar cost average into the market. Again, you want to be greedy when others are fearful and fearful when others are greedy. Warren Buffett. Bitcoin is surging as inflation hedge. Again, they were supposedly stating that Bitcoin is an inflation hedge, but as you can see in this slide right here and what we've talked about is crypto is more correlated with tech stocks than ever. So that is something important to keep in mind, and we've seen tech stocks get demolished. Now, Fundstrat Global Advisors calling the bottom of around $29,000 a coin. Just today, 5/12, we've seen that Bitcoin has already slid down to around the 27,000 price target, and now it is around the $29,000 per Bitcoin per coin. El Salvador is continuing to buy in the dip, adding 500 coins to its balance sheet. Now, based off that, we have countries still buying it, still adopting it. There's a lot of people moving into the atmosphere in the cryptocurrency space. But with that being said, be cautious, dollar cost average. This is not financial advice, it's financial education. But based on the stock to flow model, which they can use because again, Bitcoin has a finite amount at 21 million, around 19 million are mined, and around 840 are mined a day. They can use a stock to flow model for that asset vehicle. And typically, as you see on this chart, the stock to flow says that we are well below it at $39,000 per coin, or now we're at $29,000. But even at $39,000, we are still below that stock to flow model, which indicates that it is a good time to buy. So with that being said, again, housing prices, highest mortgage since 2009. What it means for home buyers. We're seeing home prices drop and their asking prices drop, which is good for people that want to buy. Now, if we compare this crash to other crashes, in February we had a crash of 34%. In October, as I mentioned before, of 2007, the 2008 to 2009 collapse, we had a 56% drop. We are at around 20 to 30% right now. Again, depending on which market you're looking at that pertains to the S&P 500, the Dow, the NASDAQ, etc., which means we could move down. Now, if you look at the housing bubble and you would have bought at the peak, it would have took you 10 to 12 years to get back to a break-even point. So that's why it's imperative to continue to dollar cost average and buy low and sell high, and that's how you can really benefit and generate the biggest wealth transfer available. Because when we are in these bad market conditions, you need to have the psychology to buy low and sell high, and realize that don't look at your percentage of your portfolio, but instead look at how much you own of a given asset. While standard recessions cause an average 26% drop in peak to trough earnings, the S&P 500 saw a peak to trough earnings decline of 56 to 57% during the Great Recession, as I mentioned. Now, how long does the average bull market last? It's about 9.1 years with an average cumulative total returns of 476%. That's almost a 5x over 9 years, which is pretty substantial, a pretty great return. And again, that's about 48 months, and the average bear market is about 13 months. So that's something to keep in mind. Now, the great transfer. This all goes back to what Warren Buffett says. Again, you need to dollar cost average. Again, this is not financial advice, but this is what we are doing. Dollar cost average into the market, accumulate more shares, and really have that mindset that, you know, I am doing the right thing. I am doing the opposite of what the market is doing. And that's how you're going to increase your return on investment and achieve financial freedom, especially in the given uncertain times that we are currently in. Now, what is Warren Buffett's remark saying as we're wrapping up this video? The stock market is a device for transferring money from the inpatient to the patient. If you've watched up to this point, I really appreciate you. Thank you for being a part of the Brotherhood. If you want to join our channel, all the perks and everything are down below. Much love as always. Have a good rest of your week, a good rest of your weekend. Peace, brothers.